Welcome folks, how are you all? I believe everyone is cool. So in this video we will learn another price action, and if you watch this video carefully, I believe that you will learn a lot from here. The information I have already given I have already given you to my live streaming, but I believe that a lot of you have missed that information, so I thought it's gonna be a better opportunity to learn if I make a video about that information. Okay, so listen carefully, watch carefully, study this video. You will learn a lot and you will be able to trade in this type of situation. Okay? So I will start from the beginning. But before starting this video, I would like to say that if you are new to my channel, don't forget to subscribe and push the notification button so that whenever I will be in live, you will get a notification and you will be able to join my live. Okay? And please don't forget to give me a thumbs up. So today is Tuesday. Tuesday is actually the manipulation day. I was bullish uh, through my weekly analysis, I was bullish. So if you are bullish as a weekly basis, in Tuesday, you will think that market will take at least the low of the Monday. So let me mark the low of the Monday. Here is the low of the Monday, and here was the high of the Monday. So manipulation, if the manipulation happen, then market should take the sell side liquidity or the Monday low first. Whole day I was bearish. Whole of this price action, the AM session price action, I was in live and I showed you how to trade this type of situation, and we were able to frame lot of trades over there. So if you are with me in my live, you know that already. Let's see, I am not interested to talk anything about here. I will talk a setup around that area. But before explaining this setup, I would love to say what happened over here. So I was bearish the whole day. I was thinking that market is going to take that sell side liquidity. This is the London session, and you can see market trade this last fair up over there to that specific leg. After trading that last fair up, market fall. Where did it reach? To this last fair up from here. So let me mark the last fair up around that area. So this was the last fair up from 15-minute chart, and around London session market reached until that last fair up, then went through this new week opening gap. Price tapped to this constant crossman one time, lot of time. Okay, it has traded this new week opening gap, traded the low of the new day opening gap, new week opening gap and the constant crossman. Then market went higher. When market went higher, we didn't participate in this price action, and because I was bearish, so I was only looking for sell. When market went higher, failed to take the Monday low, I was pretty much sure that it's gonna be an inside day. So in Tuesday, if your weekly bias is bullish and you see that market failed to take Monday low, in that type of situation, you will start to think that it's gonna be an inside day. That means market will stay inside the Monday range. Note this information to your paper, okay, by your pen. If you are bullish, with your weekly bias is bullish, and you have seen that market failed to take the Monday low, then market started to go higher. In that type of situation, first of all, you will start to think that it's gonna be a inside there. That means the whole Tuesday price action will be inside Monday price action. Vice versa, if your weekly bias is bearish, then you will think that market will take the buy side or the Monday high first, then it will go toward your Monday low. If you see market failed to take your Monday high, instead of that market started to fall, is going to take the Monday low, in that type of situation, you will start to think that it's gonna be an inside day. So please, this information is extremely important. I'm not gonna repeat it every single time. Write it down. When market started to go higher, what happened? It has taken some liquidity. Now look over here. This high has taken over here by that high. Okay, let me show you clearly. Okay. Over here, just look. This high has taken by that high. How does it take? It's taken by a shallow run. If I see a shallow run, I actually mark the high as my obvious liquidity. So this was my buy side liquidity. This is minor buy side liquidity. The extreme buy side liquidity is over here, the Monday high. So that is your extreme buy side liquidity, and this is your minor buy side liquidity from 15-minute chart. So when market went higher, it has taken this buy side liquidity, and I am pretty much sure that market is going to stay inside the Monday range. So when market has taken this obvious liquidity, I will start to look for a sell from where? From 1 minute chart. Let's go to 1 minute chart. So here market has taken that buy side liquidity. You can see perfectly after taking that buy side liquidity, market keep going higher. All you have to look for a lower market structure shift. Okay, so you can see finally you got your market structure shift over here. Maybe this low is valid for shifting market structure. You got your market structure shift, but you don't have any opportunity to trade around that area. This happened most of the time when market takes some kind of extreme liquidity from 15-minute chart. Okay, that was the, if you compare 1 minute chart and 15-minute chart, then 15-minute liquidity is your extreme liquidity and 1 minute liquidity is your minor liquidity. Okay, so I'm not gonna compare the daily liquidity, daily candle liquidity. Instead of that, I'm gonna compare 15-minute liquidity with 1 minute liquidity. So here, when I'm comparing these two liquidity, this 15-minute liquidity is my extreme liquidity and the 1 minute liquidity is the minor liquidity. Okay, so market after taking this extreme liquidity, trust me, 90% of the time you won't get any chance to take entry around that area. Okay, you will have no opportunity to take entry around that area. So this is the place I told that if you have the access to the second chart or the sub 1 minute chart, please go over there, because if you go to sub 1 minute chart, you will be able to catch that run. Okay, you will be able to catch that run. So that was the information you should have. Write it down that, and please don't forget that thing. Okay, first you have to think that market is going to fall, and before falling there should be a reason why market should fall, because market will be unable to take the Monday high because your weekly bias is bullish. In that type of situation, market should take the Monday low, but market didn't take the Monday low, so it failed to take the Monday low. Instead of that, it reversed from 15-minute last favorable gap. Then finally it worked with the new week opening gap. Then it extremely go higher, was trying to take the Monday high. Now when market will be very near to the Monday high, you will start to think that no, market is not going to take the Monday high. But if market has taken the Monday high instead of taking the Monday low, in that type of situation, please don't frame your sell setup. Don't frame your sell setup, because after taking the Monday high, market can keep going higher. Just keep going higher. After taking the low liquidity, it can keep going higher. So keep that information also in your mind. First, you will think it will be inside 10, and then you will start to frame your trade. Now, when you are unable to frame your trade from 1 minute chart, let's go to first 30-second chart. Okay, I would love to go to 30-second chart first. So here is my 30-second chart. This is the first time when market has taken the liquidity, that extreme buy side liquidity from 15-minute chart. Okay, then look what happened. Market reached until that area, then a very nice displacement, right? A clean displacement, very nice parallel gap. But did you get any market structure shift? There was any market structure shift? I don't see any market structure shift. Then market went one more time higher, went lower, consolidated. Finally market went one more time higher. Okay, so when market reached until that high over there, this is that Monday high, failed to take that Monday high, little consolidation, then make a swing low. See, this low has traded this parallel gap. So this low is valid for shifting market structure. And look, then market go to the high, all-time high. Okay, inside that range, this is the all-time high. There is no other high above that high, and a displacement with a market structure shift. So here, this is your market structure shift. I'm going to mark it. Don't think this is hindsight. If you are with me in my Twitter, you have already seen this entry I have taken, and I have uploaded that to my Twitter. Okay, so that is your market structure shift. After shifting the market structure, you have to mark the entry favorable gap. There is your entry favorable. If there is one favorable gap, then you will take one. The 22 IT model, just take that entry. If you have two favorable gap, then mark the higher favorable gap as your breakaway gap. Here, this is your breakaway gap, and you should think that market is not going to trade above the constant crossman, then where should be your target? Are you going to target this all low? No, you are not going to hold your trade until that area. Instead of that, look for another clean liquidity from 1 minute chart. Can you see this all lows around that area? Aren't they so clean? So that should be your sell side liquidity from 1 minute chart. And here that will be your entry. You will cover the breakaway gap, constant crossman, or the whole gap. You will go with the whole gap covering, and until this sell side liquidity, maybe little below of the sell side liquidity, that should be a trade. Okay, so 1:2.77, 1 to 2.77 risk to reward ratio, 2700. Not bad, brother. Seriously, it's not bad. So that should be your trade. Most of the time, if you look from 1 minute chart, you will miss that huge run, that huge fall. You missed it. Before falling, I asked to my Twitter, brother, do you have enough courage to take sell from here? Okay, so I asked that, and some of you thought, okay, this guy is just kidding, but yeah, this is the reason, because market has taken the extreme liquidity. Now it should fall. It should fall at least until the obvious liquidity from 1 minute. Now market was overzealous, so it fall until that area. You can see a huge fall, but you don't need to catch that whole run. This whole run near about 100 handle. You don't need to catch that whole run. Instead of that, you should catch that small run. Okay, low hanging fruit. Still, it's not bad. So that was the setup from 30-second chart. I would love to go to 15-second chart because I took that entry depending on 30-second chart and 15-second chart. Both of them was over there. If you really watch that video, you know that. Okay, you know that already. So same thing over here as well. Just remove this one. After taking that buy side liquidity, market keep going higher, and finally I got my market structure shift over here. When I got my market structure shift over here, I just marked a fair value gap. So this is my entry fair value gap. You can see here, this is my entry fair value gap, and that is my breakaway gap. Now I am not interested to mark the breakaway gap. Instead of that, I would love to mark that fair value gap. What is that fair value gap? So in my recent video, I have already talked about this fair value gap, which has taken, see this, it has taken this all of these lows, then it has made this fair value gap over here around that area. This is the first one, which is important, around that area. Just let me mark it. Okay, here this is one, and that is another one. This two fair value gap is important in my opinion. Okay, I was in 15-second chart. Though I took my entry, I pushed my button when it tapped over there because of the volatility. It felt lower, but it reached until this lower one. Okay, but if I would able to catch that run, I would take that entry from there. My stop loss would be just above 1 or 2 tick above that fair value gap, just above that fair value gap. Where should be my target? The same 1 minute liquidity here, 1 minute liquidity or 30-second liquidity, 15-second liquidity, but you have only this liquidity, you don't have anything else. Okay, so I could take that entry, and in that type of situation, my risk to reward would be 1:14.88. Now you can say, brother, just 2 handle stop loss. I have already proved that. Okay, I have already proven that. Instead of that, if you just don't focus on this fair value gap, this two fair value gap, no problem, brother. Here is your entry fair value gap around that area, and your stop loss should cover the breakaway gap around that area. The breakaway gap that should be covered, and target should be here. That should be your target. At the same time, here is your breaker. Can you see this breaker? High, low, higher, high. The lowest up close, body close candle. You can just cover the high of that breaker block. Okay. So in that type of situation, it's also 1:3.1:4. Okay, near about 1:4. If you just put little lower, it is gonna be 1:4 risk to reward ratio. Is it bad? No, it's not bad. So this is the logic of this trade and how to after taking the liquidity. So I have already taught you how to look for the perfect setup, how to wait for the 15-minute fair value gap, then how to frame those type of setup. Everything I have already explained to all of you guys, but I believe that it's time to go little deep on this price action. That's why I'm showing you all of this thing. I believe that you will learn something from here. If you learn something, don't forget to give me the thumbs up, okay? And at the same time, if you are new, please don't forget to subscribe to my channel. So guys, until the next video, cheers.